Would you rather have an AI or a human manage your investments?
AI. Straight up. You can't trust humans. Can't trust myself. My name is Dina and I'm a fitness trainer, a musician.
Hi there, my name is Agatha Nielsen. I work as a research consultant.
Hi, I'm Sammy. I'm a sociology student.
Hi, my name is Yvonne Liang. I'm an acupuncturist.
I'm Ross, I'm a copywriter.
Hi, I'm Mike, one of the financial coaches at Claro, and today I'm going to be reacting to millennial views on investing.
Would you rather buy Bitcoin, stocks and Tesco's, or hold your money in a savings account?
Bitcoin sounds very tempting, but it's very, very rampant, and Tesco sounds good.
Well, Bitcoin, I actually looked into the cryptocurrencies recently and I read about it, and it's absolutely terrifying to me how quickly it fluctuates and changes. So no Bitcoin for me. Tesco doesn't sound too fancy. I probably am so old-fashioned and unaware that I would keep just it in my saving account.
Shares in Tesco? No. A decade ago, yeah, Bitcoin. I will still get some Bitcoin just in case, but I don't know how that's going right now. I would just buy gold, like stuff that I can physically have.
I would say stocks and Tesco.
Do you know what? I'd go all out Bitcoin. I know that it's plummeted at the moment. By the time you're watching this video, it might have gone back up and I will look like a genius.
This is a bit of an interesting one. 3 choices, all with kind of good and bad points. So holding crypto, obviously a really, really volatile asset and kind of a single version of that. It's kind of not like a diversified fund of sorts. Everybody knows, everybody's seen the market crash in Luna, in Bitcoin and Ethereum. It's all extremely volatile. So to have some exposure to that as a small part of a well-diversified portfolio is fine, is great. It's kind of that topical thing that people jump into without thinking about it. Shares in Tesco, nothing wrong with that. Been a kind of long-form part of the FTSE 100 for quite a while, quite often is. But we are looking at single shares. So we're kind of looking at share trading and trying to time the market, which is extremely hard to do over the long term. Buying and holding single shares is generally not as easy to do as just going into low-cost index funds, ETFs, something like that, where you're basically buying the market. Then you got cash savings, by far the most stable, but also potentially the least rewarding. So inflation, obviously at the moment, everyone knows and is probably sick of hearing how high it is, and interest rates on cash savings are considerably lower than that. So you will be guaranteed to have that inflationary risk of losing your money in practical value, but it is the most stable. So perhaps as another option, it might be good to have some cash savings as an emergency fund, have that kind of safety net buffer, and then start to expose yourself more generally to the stock market. Like I say, in things like globally diversified index funds and ETFs. That might be some way to start.
Should you buy premium bonds or cryptocurrency?
I don't know what that is, so neither.
I want to say premium bonds.
So my girlfriend has put all of our savings into premium bonds. But she keeps telling me that she could win £1 million. I'm like, yeah, but you get no interest on premium bonds. We've had it for about 2 years now and we've still not got anything.
Well, I'm not so sure. I don't know about premium bonds. I have a feeling you need lots of money to buy that. Probably go for what I know. For this answer, I would say what I know. I'll go for crypto because I'm not so sure about premium bonds, but I've heard good things about it.
Probably would go into crypto because we like what's familiar, and that's the only term I've heard.
Yeah, so premium bonds used to be a lot more popular than they are now because they're essentially government backed by NSNI. They used to be seen as a lot safer, a lot more stable. Now, because we have the inclusion of the Financial Services Compensation Scheme, that kind of safety effort isn't actually as important anymore. All your money generally with most providers, as long as they're part of the FSCS, is backed up to £85,000. And even though you may go years without winning absolutely anything, the guy's right that you might win £1 million at some point. Probably likely you won't. It is essentially a version of an easy access savings account. You can put money in when you want, you can take money out generally when you want, and it's there in stable, non-volatile cash. The downside is that it doesn't have an interest rate. So you're basically buying a certain amount of coupons and then you're entered into a draw, and then at some point you may well win anything from about £25, I think, up to about £1 million, something like that. Now you may go months and months and months and months and months without winning anything, or more than likely sometime around the first year or couple of years or whatever it might be, you might end up winning one of those many £25 prizes. When it comes to crypto, interesting comparison by the way, That is almost entirely the opposite. It is extremely volatile, as you can see, and it basically, it can well form a little bit of what we call a satellite investment. So it's not going to form a massive part of your overall investment portfolio, but it's just there so that you can have a little bit of an exposure, so that if it does go up and you do see big price rises, you'll collect a little bit of that. There's very rarely anyway, crypto funds where you can create kind of a, pop your money in, you're exposed to 7,000 companies or crypto assets, and you can kind of have that diversified approach. Most people, when they're investing in crypto, go straight into one single coin or a few coins. So there's not that diversification in what is already a volatile asset. Kind of bad news for most beginner investors, especially if they don't have easy access cash savings or any exposure to the stock market already.
Would you rather have 5 Bitcoin or your dream job?
You know what? I would rather have my dream job because then I would be making money doing something I like.
How much is 5 Bitcoin at the moment?
For about 100,000.
Oh, dream job pays more than that. Dream job.
I already have my dream job, so I could get some more crypto. Nah, I'll keep my dream job. I love my job. Yeah.
Dream job, easy.
Oh, my dream job. My dream job's worth so much more than Bitcoin.
Really good kind of answers there. So basically, I think Bitcoin at the moment is somewhere floating around £17,000. So you'd be a little bit under 100k or £90,000 or something like that if you had 5 Bitcoin. Having a dream job not only may well pay you more than that on a kind of annual, biannual, whatever it is basis, but more importantly, if it is your dream job, then it's going to give you that satisfaction. And so you've kind of got that bifocal effort where it's giving you both things. More importantly, probably that daily satisfaction and that passion and that realization that you're actually doing something that you love. Everyone does bang on about it, but it's basically the way to make you happy. Combine that with a good salary, especially in today's economy, you're laughing.
Would you rather have an AI or a human manage your investments?
I don't trust any of them because this AI is going to be made by a company, right? And that company has made that AI for some sort of agenda. They haven't made it for the good of humanity. They're going to be trying to profit off it somehow. But then that's the same for a guy working for a company. So you can't trust anyone.
AI. Straight up. You can't trust humans. Can't trust myself.
Feel like on one hand, probably artificial intelligence has a computer system that can navigate through everything that is going online with the stocks and currencies and the market and finances going up. Probably I would go for artificial intelligence.
I manage my own investments. I don't trust nobody. Nobody. I think a mix between AI and myself. I'm as good as AI.
You know what? I would almost want an AI to manage my investments just because it's very mathematical and a robot would just have more brain power to do that.
Yeah, so this is actually an interesting one. So the main point that comes to my mind with this, which is probably not the same as a lot of other people, is fees. So one of the major benefits of having, say, an AI manage your investments compared to a human kind of portfolio manager is the fact that generally they have much lower fees. Now, one of the most important parts over the long term of generating exponential returns and making sure that you end up with as much as possible at the end of your timeline is minimizing fees. They have a massive impact. So if you've got, again, a diversified approach and they're going to be tracking the market, they're basically using indexes to track for you, it's going to be able to do an okay job at the same time as charging very little. If you've got an active investment manager, generally they will charge significantly more. And the key is that there was a lot of studies done, I think it was in the 20 years leading up to 2008 or 2018, something like that, where they said that around 80% of active investment managers did not beat the market. And what I mean by that is that they did not get profits or returns in excess of the indexes that they were following. They would need to not only meet the index in terms of the returns that they're generating, but also more than that because they'll be charging a fee. So they need to make that worthwhile. So what you'll find is that while for some individuals having an active manager can be beneficial, for the vast majority of people, so the majority of the public basically of what we call retail investors and beginners, having an AI is probably going to be the best option, not only for anything else than just minimizing fees and maximizing the returns you get over the long term. So thanks guys, that's been Millennial Views on Investing. Hopefully you've learned something and you've liked it. Don't forget to like, subscribe and comment below with your thoughts on investing.